I want to talk about achieving financial freedom. Now, I could talk about it in a theoretical way, and I can talk about the risks that there are, but what I want to do is talk about how I achieve financial freedom. So I'm going to use me as a case study so you can see what I'm doing, and perhaps that's the most honest way in which you can talk about financial freedom. Welcome to the video. This is a personal account about how you achieve financial freedom. If you like what we say, then please subscribe, watch to the end and subscribe, or if you want to comment on it, on some of the issues that are raised, that'd be great. Achieving financial freedom in an uncertain world is, by its nature, uncertain and not easy to do. So I want to explain how I do that and the risks that I see, and how I protect myself against those risks. So what are the main risks? Well, I see that in the economy as a whole, although it is doing really, really well, there's very low unemployment, there's growth, companies are very profitable, but there are some risks. And for example, the American stock market is peaking at about twice what it was in 2008 at the height of the last bubble. So it's twice what it was at the height of the last bubble, which just seems risky to me. During the last recession, the government printed a whole load of money, and at some stage I just see that coming through as a potential for a whole load of inflation. And then I also see a risk, because there's a lot of debt in the economy, there's government debt and there's individual debt, that could all collapse and give a recession, quite a severe recession. And I see all of these things, and some of them are contradictory. But those are the risks you can see. And generally, the things that create a recession are the things you can't see, the unknown unknowns. So I need to protect myself against things I don't really know are going to be on the horizon. So protecting yourself against the unknown unknowns is also important. This is what I personally want to do to mitigate risks and to build my own financial freedom. Your circumstances will definitely be different. So if you want to talk about your specific circumstances, then please get in touch. Hopefully you'll be able to get some lessons from this, but what you'll be doing will be different to what I'm doing. So what are my circumstances? Well, first of all, we do broadly have financial freedom. So for me, it's all about protecting what we've got rather than looking for growth in the future, because I'm much less interested in having more money than I am in keeping what we've already got. And also, I'm sort of quite well into my career. I wouldn't like to say the end of my career, but I'm certainly well into it. And that certainly changes the way I think. And it means that I'm more careful because I can't re-earn the money if it was all to be lost. So what am I doing? I mean, the first thing that we've done is that we do not have any personal debt except for mortgages on properties. So I don't have any car loans. There's no credit cards. All my credit cards are paid off by direct debit at the end of the month. And I think getting rid of all your personal debt is really important. And that, yes, that does mean that my car has done over 100,000 miles, but there we go, it's fine, and I'm really happy with that. The second thing is that I make sure I've got a cash fund so that I can pay my bills come what may. So I've got enough cash that I can pay all the salaries of all my staff and all the bills of the business and all my personal expenses for a couple of months if I was not to receive a penny in income from my customers. That's not a challenge. Having a cash fund is really important because it just adds to your quality of life, because you just don't have to worry about making each of your payments every month. You just know you can do it. And I think that's really important in terms of achieving your financial freedom. So as I said, the stock markets in America are almost twice what they were at the height of the bubble last time. And the UK stock market is somewhat higher than it has been. And the performance of the stock markets in recent years has been amazing. But it's like we've been on an escalator. And the thing about an escalator is that you get off at the top, and the most likely thing to happen when you've been up an escalator is that you go down again. And I think that's really relevant to what the stock markets are doing. Now, it may be that the stock markets go higher, but as I've said before, our emphasis is on keeping what we've got, not in earning loads more. So I've started to sell shares. I'm not really interested in the capital growth because, you know, it's a little bit like collecting pounds in front of a steamroller. I'm not interested in those pounds. I want to make sure I don't get crushed by that steamroller. And although the stock markets may go higher, they may go a lot higher, I'm much more interested in protecting my assets. So I've started to sell shares. We're doing that month by month, not going mad, not selling everything, but just looking at some companies, deciding that maybe we can just reduce some of our holdings and creating some cash. I'm also worried about the increase in inflation. So that really matters, because I think if inflation increases substantially, then interest rates will increase substantially. And if you know me well, you'll know that we just bought extra offices, and we have a bit of some mortgages relating to that. Now, with those mortgages, if the interest rates go up very substantially, I want to know that I'm okay to pay the interest. So what I'm doing with my cash is I'm not paying the mortgages off, because I just think that if the economy goes really bad, I might be able to buy some other stuff quite cheaply. So I'm keeping the cash there, but at the same time I've got it available so that if the mortgage interest goes up substantially, I'll be able to pay off some of the mortgages and not have to pay huge amounts of interest. And I think being protected against increased interest rates, and I'm not saying 2 or 3%, I mean 4, 5, 6% interest, to make sure that you can pay interest if it goes up substantially, I think is a really important part of achieving financial freedom. In terms of protection, it just occurs to me that all financial assets could go down at the same time. Inflation could eat into your cash, and into higher inflation like we were used to in the 70s and 80s could really eat into your cash. High interest rates could make borrowing money really uncomfortable. And at the same time, the stock markets are very highly valued, and if you want, government bond yields are very, very low, so they could really substantially reduce in value. So all financial assets could reduce at the same time, and I want to protect myself against that. So the way I've done that is we have the property, so we've got some commercial property, and we've got some flats above the commercial property, which is really helpful. But I think that having some other assets, having real assets, is really helpful. So traditionally that would be sort of precious metals, but it can be other sort of real, tangible, valuable things. And I think having a little bit of that is not a foolish thing to do. And it certainly helps me protect myself and make sure that that come what may, and come what the governments do to our currency, then you've still got something. But I'm also interested to know what you do to protect yourself and how you achieve financial freedom. So please let me know by commenting below the video. Thank you.